Today, we will be telling you what exactly compound interest is and how you can use it to make money by doing absolutely nothing. Several studies have shown that investing money and leveraging compound interest has helped grow more wealth than the initial investment. Rich people around the world leverage this principle, and today, you will learn how you can too. Welcome to today's video, where you will learn how to utilize the tool of compound interest to your maximum benefit. Before we begin, be sure to subscribe and turn notifications on to be notified when a new video comes out so you can receive all the latest financial tips. And if you know someone who would benefit from this video, please share it with them. To start, interest is known as the additional value an investor earns on their original investment. Now, there are two kinds of interest. First, let's talk about simple interest. Simple interest is where interest is earned only on the original investment, and this happens in a linear way. Most people know this, and they think all interest works this way, and that's how they would calculate the growth of an investment. However, compound interest is when interest is earned on the interest. This means that not only the investment is earning interest, but also the additional interest is earning interest, hence the name compound interest. To understand what this exactly means, let's take a look at some examples. For example, you deposit $10,000 at a 5% simple interest rate over 3 years. For the next 3 years, there will be a 5% interest applied on your $10,000, which means that you will get $500 per year from your investment and $1,500 at the end of the third year. Using the same figures and this time applying compound interest, if you deposit this money in the bank at a 5% interest compounded annually, you'll be earning $500 in the first year, same as the simple interest. However, in the second year, the interest you'll be making will be 5% on $10,500, since the $500 from the first year is added to the original principal. The compound interest would be $525 in the second year, $25 more than the simple interest. Similarly, for the third year, you'll be earning 5% on the $11,025, which is an additional $551. Over the 3 years, you've managed to make $1,576 by compound interest, which is $76 more than what you managed to earn by simple interest. Can you see how we just love compound interest? We've explained the difference between simple and compound interest and shown how it is used to have money make money. In the rest of this video, we will show you how you can apply it in your life to earn money. First of all, the thing about compound interest is that anyone can reap the benefit of it. You don't need to be a Wall Street wizard or an MBA from Harvard to learn how to benefit from it. Compound interest is something from which anybody can benefit. Almost any investment will earn compound interest if you leave earnings in the account. Of course, there are two key ingredients that are needed to have compound interest truly work its magic. Time is the main magical ingredient of compound interest, and the other is patience. Not obvious ingredients, but very powerful when it comes to growing wealth using compound interest. Consider that the longer you put your money to compound, the faster it is going to grow. Time makes compound interest work its magic. Consider money growing at a 6% per year will double at about 12 years, but it will be worth 4 times as much over 24 years. So patience is key when acting in terms of benefiting from compound interest. A simple analogy is of a single tree growing in a forest. If you give it time, that single tree will lay seeds that will sprout multiple trees. Then each one of those new trees will grow more trees from their seeds, and soon a forest will be created. Then it will grow larger exponentially with every tree in the forest making new trees. The same is the case with your hard-earned money. Each new dollar starts growing more dollars, and those dollars grow more dollars. A perpetual money machine thanks to time and patience. Now pay attention, as you want to know this. It's important to know that credit cards and other open-ended accounts use compound interest against you. This is why minimum payments are preferred by credit card companies. To avoid this, you need to get rid of your credit card debts as soon as possible. Then start putting your money into a savings account that also uses compound interest. If you can't do that, consider moving your balance to a credit card that has a lower interest rate to reduce compound interest working against you. If all you can do is pay your debts using the minimum monthly payments. In that case, it's likely you may never escape the forces of compound interest being applied negatively to you, let alone start benefiting from compound interest. Sorry to be so direct, but it has to be said. Now, it's no rocket science that banks are not paying much on savings accounts, but several mutual funds average a higher interest rate, no transaction charges, and allow a low account balance to get started. Go shop around for these accounts. They are out there. Today's low interest rate environment doesn't mean that you stop thinking about the prospect of compound interest. Since you know that your money will grow over time, it's something you should constantly utilize. The point is to find an account that provides a high interest rate, which usually is never a classic savings account at the bank. Of course, this isn't financial advice, but financial education for you to learn from. Now, think for instance, if you were to earn $50 per month and you made 5% interest compounded annually on that money, that continued for 10 years, you'd put $6,000 into your savings over those 10 years. With the magic of compound interest, the account balance would actually be worth $7,550. Even if you didn't add a single dime after those 10 years, it would be worth more than $15,690 in another 15 years, or at the end of 25 years, $15,690 grew from only $6,000. A 2.6 times increase in the initial savings. Now that's the magic of compound interest. So, the key tip here is to deposit your money early and regularly, and then allow time to grow your money for you. This is how you can make money doing nothing. As mentioned earlier in this video, compound interest also applies to credit cards. If you missed that part, go back and watch it again. In the case of credit card debt, the interest payments are also compounded. This means that credit card debt not paid off in the first month accumulates interest on that balance in the second month. Most people think that they are paying down their principal debt, when in fact they are paying the interest on the interest of their principal debt. This is why it takes so long to pay off credit card balances. This is a very dangerous place to be and hard to recover from, as credit card interest is very high at 14% compared to a savings account interest of 2%. Knowing this, your goal should be to make sure any credit card balance is zeroed out at the end of the month. Or, like previously recommended in this video, to switch to a low interest rate card. However, if you carry a credit card balance from month to month, compound interest can also slowly free you from your credit card debt. If your interest rate is at 14%, for example, you add an extra $20 per month to your payment. Over the next year, you'll manage to avoid precisely $355 of debt rather than the $240 you put toward the credit card debt. This use of compound interest can help you massively avoid future credit card payments. This is one of the tips that you can use to get rid of your credit card debt. The results do depend on the current interest rate on your card, of course. The beauty of compound interest is you don't necessarily need to be rich to make it work. This is because the principle works the same regardless of the amount. Be it $100 or $100 million, the person investing $100 million may have more investment options since they have a higher initial investment. Still, even the person investing $100 can use compound interest. This is because the concept of compound interest is going to work the same way, whatever amount you invest. To recap, to reap the true benefits of compound benefits, you'll need to trust that your money will grow over time. This takes patience, discipline, and faith to leave your money in an account and allow compound interest to work its magic. And trust that compound interest is real. And know that it will be worth it in the long term. If you enjoyed this video, give it a like, and be sure to subscribe and turn notifications on to be notified when a new video comes out, so you can receive all the latest financial tips. And if you know someone who would benefit from this video, please share it with them. Compound interest is something that you certainly need to know. If you're patient, then it is one of the best tools out there to make money. You don't need a sizable investment to make it work. Your current savings will be enough to start leveraging compound interest at a reasonable rate. All you need to do is invest in a high interest rate account and be patient. These are the two most important factors when using compound interest, as mentioned at the start of the video. To summarize, what we learned in this video is that anyone can benefit from compound interest. Start investing early to maximize the effects of compound interest. The more time on your side, the better. Compound interest makes new money with the money made from earlier compound interest. Pay off credit card debt with every bit of extra money as it leverages compound interest. Or switch to a low interest rate credit card to escape compound interest being used against you. And finally, you don't have to be wealthy to make compound interest work. You can start benefiting today. That's it for today's video. Make sure to comment on what you learned or how you plan to use what you learned today. We love to hear from you, and I will see you in the next video.